What's going on, guys? Welcome back. I'm sorry, I know I haven't posted in a while. Guys, relax, it's fine. I'm back. Alright, I'm back, and in today's video I actually got a very interesting one for you. If you took this trade that I'm about to show you, right, on an FTMO challenge, you would have passed the whole challenge, phase 1 and phase 2, in only one trade, right? Because to pass, of course, you need to make the phase 1, you need to make 10%, and then phase 2, you need to make 5%. So in total, that's 15%, correct? So in order for you to be a fully funded trader, you need to make 15% on the FTMO challenge, right? To pass. This trade was a 1 to 25. Alright? A 1 to 25 risk reward. So if you've risked 1% on this trade, you would on your account, on this specific trade, you would have made 25, almost 26%, guys. And I've also sent this group to my VIP members. I will put a screenshot of that before and after. So if you guys are interested in joining my VIP, where we absolutely kill the market, only sniper entries, literally this trade had only 3 pip stop loss. Guys, can you just pause for a second and realize how tiny of a stop loss we have on these trades? I'll put a screenshot of proof that I've sent it to the VIP members, and if you're interested, I'll leave the link down below in the description below. So without further ado, let me just show you how this trade made me 25% gain on my account. It was on GPP JPY. You see, perfect entry, perfect exit as well. So because if you know when to enter the market in the correct place, but you don't know where to put your stop loss, some winners can become losers. Like if we didn't close our position up here, the market would have literally been a loser. We would have gotten stopped out at break even. So that's why you need to make sure you have your take profit in the correct places. So let me explain this. Obviously today is Sunday, so the markets are closed, but I'll rewind the charts so that we can take it step by step and show you what I did here. So I was looking at the market, I think about around there, just before Asia session. Alright, so looking at higher time frame, if you watched my previous video, you know how I break down my trades and how I look and find these trades, right? So looking at higher time frames, such as the 4-hour time frame, is so the previous 4-hour, previous market structure is quite a little bit bearish, or more of a retracement for the overall move, right? You can put a Fibonacci from the start to the end of the move, and we have a 50%. I don't use Fibonacci. It doesn't make sense. They do work, but I mean, there is a reason why the market stopped at that specific price, and then started reversing. Not because it hit a PRZ level, and now it hit a Fibonacci, and now it must go up. No, there's a deeper reason on why the market stopped there. But obviously, you can put on the Fibonacci, and then anyway. So looking at overall market structure, it's obviously bullish, bullish here, retracement, and I was like, okay, I want to buy the market from a discounted area, from a demand area. So zooming in on the 4-hour, you can see here we have this little mini order block right here. All right, so let me mark that so you guys can see it from here to here, and we can call this demand. So we have this mini demand area. After that demand area was created, we have volume, we have a bullish engulfing, we have buyers come in the market. So that validates our order block, because we have 2 confluences or 2 confirmations that makes an order block valid, and in this case both are present. So we are confident in this order block, and you can see you could have scalped this down. I've marked this supply area and market taps into it, and then went to our demand area. So you could basically scalp but I don't really like. I scalp, but I intraday at the same time. So, but more of an intraday. I hold my trades throughout a day, maybe or two sometimes. So, anyway, so I found a demand area on the on the 4 hour. So, what do we have here? 4 hour demand area. Then we drop down to the 1 hour, and the 1 hour is still the same, order block. You could actually refine it to this little mini one, but I don't like to refine my order blocks too much. Like, I don't mind 20 pip stop loss because my risk reward is insane, and I don't go with positions a lot more than I can afford, so I don't mind 10 pip stop loss, 20 pip stop loss, 30 pip. Depends on the setup. Don't be one of those that, oh, my stop loss has to be 10 pips. It doesn't have to be. Nothing has to be. All right. So trading is dynamic. Whatever the market is presenting, you gotta adapt and you gotta go from there. So 4 hour demand area, 1 hour demand area. Now market taps into it and gives us our first rejection sign, right? I didn't just enter blindly. I wait for confirmation. Be patient with the market. Be patiently aggressive. So market comes in and flies, gives us a rejection. Let's go back to the 30 minutes, and we can see here we have a perfect demand area over here. So let's just play the market and see what it did. It gives us a rejection. It retests that supply area from the higher time frame, if you remember, and then now it's heading back down to our demand area. Boom. It makes now Asia session started. You can see here I have this line, and when Asia session started, it created equal lows. Now when equal lows are created, the market loves to break down to break that and grab the liquidity, because your retail normal strategy, double bottom, we should buy, right? But markets are very clever and they know that. So what they do is, whenever you see a double bottom or a double top, be careful, because the market will wick and break that. So me knowing that, I completely was patient, and I don't really trade Asia session, so I was just monitoring the trade from here. So Asia session, boom, look what happened here. When Asia session finished, right? Asia session stops at around 5:36. Boom. A few hours just before pre-London, market wicks, and what does it do? It takes out the liquidity, the equal lows. Once I saw that, right? Once I saw that, and I saw these massive candles to the upside. Now, what do we have here? We have an induced order block. What that basically means is the order block was created straight after the market took equal lows or equal highs. And what that means is that the smart money has already pushed the market down to grab the liquidity and push the market up. So once they pushed the market up, I went down to the 5 minutes. And you can see it, no, maybe it's not 5, it's the 50, yeah, it's the 15 minute. So market grabs liquidity to the downside, wicks down, takes all the stop losses from there, and then it flies from there. But before it flies, what does it leaves behind? An order block, a mini demand 15-minute area. I instantly marked that up and had an alert set at this price, 154,129. And then you just wait and you watch the market and see what it does. It goes back into that supply area from the higher time frame, and then it comes back to our demand area, right? It didn't touch yet, so you don't enter. Be careful, don't be fooled. If it's not in and gives you bullish market structure and gives you clear signs of rejection, don't enter yet. Market plays around, it's consolidating now, up and down, and then boom, what happens here? Comes down into our 15-minute demand area. Now once price is inside that demand area, I go down to the 3 minute and sometimes the 1 minute. Once I drop down to the 1 minute, now I'm waiting for something called change of character. Do we have it here? Yes, we do. All these highs were broken and are closed above. What does that mean? Market structure has been broken and now we are heading to the upside. But before we do, we have a mini 1 minute demand area. See what I'm doing here? I'm breaking it down from all the way to the 4 hour, all the way down to the 1 minute, such as the 1 minute. So once we identified our 1 minute demand area, there's literally, it doesn't get better than that. Then I've marked that up and we can click here and make it our demand area. And at this point I put limits, right? Because my stop loss is only 3 pips. So I'm not worried if the market wicks me out with 3 pips. I can always just re-enter. If the market actually wicks down and flies up again, I can just re-enter. So I've set limit because sometimes the market wicks super quick. Like before you enter buy or before you calculate your position, the market has already left. So I set limits at that price where that order block started, and we see how we have 154,110. I put my buy limits at that price and I put my stop loss at 154,077. So we have 3 pips stop loss. And what do we target? Oh, actually, before we talk about take profit, let's just see what happened. Of course we do know, but you see how we have a break of structure to the upside, right? We even have a break of structure above these this high here. So now the market is making higher highs. It stopped making lower highs, it's now making higher highs. So now we wait back for a discounted price to buy the market. So let's see what happened. Price comes down, consolidates a bit. Remember, this is the 1 minute, so it's really fast when it's happening, and this is why I like to put buy limits and stop losses instead of market executions, because sometimes you're not on your phone, you're doing this, you're doing that, and you don't want to miss on such a beautiful trade like this. Comes down, boom, it wicks again, and boom, taps you in, and market goes on its way. Look at that. Beautiful, beautiful, beautiful sniper entry. I will put screenshots on the screen of my my MetaTrader entry, and I will show you also proof that I've sent this trade to the VIP members. So if you are interested, go down below to the description, join the Telegram. I have a free Telegram group, so you can join there. Sometimes I send breakdowns, sometimes I send free signals, but mostly, of course, my priority is the VIP. So if you are interested in that, message me privately on the Telegram, and I will and we can see what we can do. Take profit. So I always go back to the 4 hour or the 1 hour time frame. When it comes to take profit, I like to target places like this. We have one take profit here, and we have one take profit here. So I've had my take profits there, and of course the market, boop, straight to our take profit. Zero drawdown whatsoever. You get triggered in, and you're in the trade, and you've just made 25% gain on your FTMO challenge. Congratulations, you've just passed your FTMO challenge. You are now a funded trader. Guys, I hope you found value in this video, because this is real, this is real, and this is how I trade the market. And the reason why I have lines here is because if you've watched my the way I trade video, my strategy and what I do to have my charts looking the way it's looking right now, please go back and watch it. But yeah, guys, I hope you guys enjoyed today's video. This video was about how you can You can easily pass an FTMO challenge or any funding challenge with just as simple as one trade, right? If they even allow you to do so. But you can see here how easy this is. Now, obviously, it's easier said than done, but we really do this. So do yourself a favor, come join us in the VIP. Let's catch some pips together. And guys, I will see you in the next video. Peace.